Hey, what's going on everybody? Leo Invest here, back with another YouTube video. This video I'm going to be showcasing a gold short that I took for 24 points on October 27th of 2025. So let's get into it by actually breaking down the higher time frame analysis on what gave me the true bearish bias when looking for these gold continuation shorts. And it all starts on the 4-hour time frame, where I give myself the opportunity to profile the higher time frame, aka the 4-hour profiling, to determine where true trend lies. And if we look at the highs here that were formed on Thursday, what exactly do we see happen? Well, after around these highs on Thursday, we saw a retrace back into some internal draws, where then the Friday market and Monday market ended up retracing back up into these highs again, where we then saw a reject where we swept out some liquidity from the previous Thursday high and then saw a very aggressive bearish leg lower. Following the end of the week, we had a bit of a chop fest on gold where we had a bit of an accumulation phase. We did see a continued bearish move lower as we were forming lower lows and lower highs during this process. Now let's talk about the new week and what actually gave me this bearish bias for the new week. Well, paying attention to the hour 4 profiling, the hour 4 was still very much so in a bearish trend. And so with the Sunday opening gap, what did we see? Well, we actually ended up opening with a gap down, retracing back, filling up the new weekly opening gap on gold before then having a bearish closure on the 4-hour. Following that, we had the 10 o'clock to 2 a.m. 4-hour window where we had a very indecisive bearish candle that had ended up sweeping out some previous lows, the 2 o'clock and the 6 o'clock Friday lows, and then having a very indecisive bearish closure. Then with the 2 o'clock to 6 o'clock window, this is the London session window, what exactly did we see? Well, we ended up seeing yet again another bearish continuation lower, this time being a very bearish closure that actually closed below the previous 4-hour low, being the 6 o'clock low from Friday. Following that, what do I typically look for? Because as many of you know, I trade the New York AM session primarily. What exactly was I looking to see with this trade to potentially give me a more bearish bias on the day? Well, here we see with the 4-hour bearish closure, I'm going to mark out the equilibrium, because if we're looking for continuations on trades, I want to see market retrace into the EQ of the previous 4-hour candle and then respect it by forming the wick before the continuation lower. And here we see with the 6 o'clock candle, we had the open here at around 4,053. And then with the beginning of the 6 o'clock till 7 o'clock window, which we'll break down on the smaller time frame, we ended up seeing a continuation where we retraced into the equilibrium of the 2 to 6 o'clock 4-hour window, forming the wick of the continuation candle. Following that, around the 8 o'clock to 9 o'clock window, we saw that the wick was formed, and then we saw a bearish continuation lower, which will break down my actual entry on the smaller time frame. And so utilizing this 6 o'clock to 10 o'clock, we saw that because we had respected the 2 to 6 o'clock equilibrium window, we formed the wick, and now we're just anticipating a continuation lower. So that's my 4-hour analysis, what gave me a bearish bias for gold. Now I was looking to see more of the external draws to be swept out. And so we'll mark these out here in an X just so you guys can better see where exactly the draws lie. Because gold had respected the EQ, I was now trying to frame a short signature on the smaller time frame in correlation with the 3 and 30 minute entry signature. So looking at gold on the hourly time frame, similar to what we saw on the 4-hour, what exactly do we see? Well, we had the Sunday morning gap up. We ended up filling the new weekly opening gap, continuing with a bearish signature lower, where then the 4 o'clock during London session ended up closing below this internal draw at the 7 o'clock Friday low, before then seeing a retrace back into the EQ. As we know, the 6 o'clock is the end of the 2 to 6 a.m. 4 o'clock or 4-hour candle, and so the retrace here formed the wick before we then saw a reclosure back below. This then signaled a continuation signature where we could target some external draw on liquidities as some potential price targets. So let's go on the 30-minute time frame now and see what exactly that looked like. So here on the 30-minute time frame, we had respected the 4-hour EQ as I had mentioned before, but there were a couple different things to note, both in correlation with the 30-minute as well as the 15-minute. Here we see on GC, we had a 30-minute fair value that formed within this equilibrium as well. And so if we look at market, and as many of you know, when I try to take continuation trades, I try to frame the continuation trades by utilizing points of interest in market, aka areas of high liquidity or high price action, in order to determine whether or not we get a continuation. And so here from the 8 o'clock window, the 8 o'clock 30-minute ended up retracing higher until the 9 o'clock actually tapped into this 30-minute fair value gap. So this 30-minute fair value gap also was in correlation with the 15-minute, which I'll break down in a second. But because we had retraced into this 30-minute fair value gap, this now becomes a high area of interest for myself, because if I'm looking for a continuation, this can act as an internal protected high. and an internal protected high only gets validated once we see a closure below the move that led to the sweep of a POI. And so this two bullish candle body up closure here actually ends up being the move that led to the sweep of the fair value gap. So a closure below this internal change in state of delivery validates this as an internal protected high. And we see at the 9:30 window, we actually got a validation on the 30-minute time frame of this internal protected high, which then gave us a beautiful short signature where we then saw market continue significantly lower. So now let's actually break down my entry point for point on the 3-minute. That way you guys can better understand where the entry was taken. So here on the 3-minute time frame, what exactly do we notice about gold in specific here? So here was the IC on the 30-minute time frame, but let's actually just break down the entry pre 9 o'clock. So looking at the 3-minute time frame now, let's pay attention to where market retraced into this POI. We see here that the 9 o'clock candle open retraced into this 30-minute and 15-minute fair value gap. And so if we want to validate this as a continuation signature, especially because the higher time frame still wanted to continue lower, we want to validate an internal protected high by seeing a closure on the smaller time frame below an internal change in state of delivery. As I've mentioned in a couple of my continuation videos, if you want the validation of an internal protected high, once it retraces into a POI, you want to see a reversal signature by seeing a closure below a SIST, aka an internal change in state of delivery. Because this move is not an original candle 2 sweep, and instead this does formulate a continuation entry signature instead of a original reversal signature, I look to see the closure below an internal SIST, hence why it is called an internal change in state of delivery and not a generic SIST that you see for something like a C2 sweep or a general market structure shift. And so here what I was looking at, and this was live on stream, once we had retraced into this 15 and 30-minute fair value gap, I was looking to see a candle body closure on the 3-minute time frame in order to validate an entry signature on this IC. And so let's play out the next bar to see what exactly happens here. Here we see on the following 3-minute candle, what exactly did I notice? Well, we actually ended up getting a candle body closure below the IC, the internal change in state of delivery. So I'll just enter a trade here so we can better understand how exactly I managed to take this position. With the closure below this internal change in state of delivery, this now validates an entry signature into this short position. And so here my entry was taken at the IC with my stop at the internal protected high, because as many of you know, when we are looking and using an internal protected high, we don't want market to retrace back above the internal protected high, as that will be an invalidation and you could eventually potentially framework a different opposing bias, aka because I was looking bearish bias, if we had swept out the internal protected high, I could now potentially switch my bias to a bullish bias if confluences align. But in this example, because we closed below the internal change in state of delivery, this now validated a short signature where I'm looking to take a stop at the internal protected high and target a 2R on this position. Here we see with the 2R, it lines up very well with these internal draws down here. But what was a different thing about this trade in comparison to some other entries that I usually do? So with an original entry below this internal change in state of delivery, the 2R actually lines up very well with this external draw on liquidity at the 7:36 a.m. and the 7:39 a.m. low. So we'll mark this out with a quick X here so we don't forget about this external draw when targeting this short. But here's the thing, with this trade, what else did we form that I was interested in looking at potentially seeing a retracement to? Clearly the closure below the internal change in state of delivery, it was not the strongest closure. So for myself, I was anticipating a potential retrace into the fair value gap that had formed here on the 3-minute time frame. We see that between the 9 o'clock and the 9:06 window, we had another fair value gap form. So let's continue to play out here, because in this position, I ended up taking one market entry with one mini contract below this internal change in state of delivery. But now let's see where my second mini was taken for this position. Here we see, as market continues, what exactly happens? Well, because of a weak closure below the internal SIST, gold decided to retrace, and it decided to retrace all the way inside of the fair value gap here. So let's just let this play out so we can better understand where the trade entry was taken. So here we see, if we just move to the 5-minute time frame, we see that gold actually formed a 5-minute fair value gap here. And so when I'm looking at potential confluences, as well as looking for continuation signatures, I'm looking to see a validation of internal POIs to then validate yet again another internal SIST. And so here we see with this 5-minute fair value gap that formed, the 3-minute time frame, which was my original entry time frame with the internal SIST, ended up retracing inside of this fair value gap once again. And so retracing inside of this fair value and then getting a closure once again below this internal change in state of delivery validated yet again a continuation signature on gold. And so these were one of the major things that I was watching for, because once we validated this fair value gap on the 5-minute as well as the 3-minute fair value, this gave me enough confluence to know that market was indeed weakening and bears were still very prevalent in market, ready to send gold lower to these external draws. Also, just for some additional notes, we also did have this nice bearish 3-minute breaker block form as well, which is, although it is a conflicting confluence where we could potentially see a rejection off of it, a closure below this bearish breaker could indeed yield a very good continuation signature to this external draw. Also, for this trade, once I entered my second mini at the rejection of this fair value gap, I ended up moving my stop loss to the new internal protected high, which was formed by this retrace into this 5-minute fair value gap. So now, with my given risk, I was risking 5.4 points for the chance to make 4.37 with a P&L of a potential 5R on this trade. And so now let's continue to play out the charts to see how this trade unfolded. Here we see, once we got a closure back below that IC, we retraced a little bit, had a continuation, and rejected off of the bearish breaker block. We'll continue to play this out. We saw we got very close to our TP, and here we actually did end up taking a partial out at 2R. This is one thing that I do want to make note of, and so we'll mark this out on the chart here as my area where my partial was taken. So one of the major things I was looking to see in correlation with this bearish breaker block was the idea that we had this internal draw. So for myself, in order to move my stop to break even on this trade, I was looking to see a candle body closure below this internal draw on liquidity as well as this breaker block to then move my stop to break even. So here we'll continue to play this out, since although we did get close to my take profit, no partials had been taken quite yet, and I was waiting to take a partial once we saw a candle body closure below this internal draw, and then move my stop to break even so that this gold trade would remain a risk-free trade. So let's continue to play this out now and see what happens. We see that for 2 candlesticks, gold retraces above the bearish breaker, retraces back to our break-even entry, throwing us into drawdown temporarily. But here, once again, what did we see happen on the following 3-minute candle? Well, we saw a very aggressive closure below the breaker and the internal draw on liquidity. And so here was an area where I ended up taking one of the 2 minis out on this position and moving my stop to break even, where I then was now targeting my final mini at this external draw on liquidity at these lows. So let's continue to play this out and see what happens on the following candle. Here we see we get a 3-minute closure, taking us nearly to our full TP, but what do we also form once again? We form another fair value gap here on the 3-minute time frame. So for myself, if I want to see a continuation into my external draw, I want to make sure that this fair value is respected once again, creates an internal protected high, and validates a continuation into my external draw on liquidity. So let's play out the following candle to see what happens. And here we see we tap into the base of this 3-minute fair value and then reject lower, with the following 3-minute continuing lower, taking me out at my maximum draw. So this trade, although I did not give you guys the exact fill, this was a 23.9 point win on GC. The reason why is I ended up having a lower average because I entered in a second contract upon the rejection of the 5-minute fair value gap. But all in all, this was absolutely a textbook continuation short on GC, making me just over $4,000 in under 30 minutes. So overall, a very great trade and a fantastic Monday day of trading. Indices were quite indecisive and we had some bar coding during the New York AM session, hence why I decided to trade more so on the commodity side of things. But if you guys did enjoy this trade recap video, please feel free to like and subscribe for some more, and I will catch you all in the very next video. Have a good one. Bye.